Action.
So if you're talking about the ROCs and ROEs, so the 62 crores of amount is still in work in progress. And when these assets will come and start sweating, they will start generating the results. And this is a phase where we have raised capital for further growth, and hence there's a temporary blip which will eventually reach the 30s level in this coming year itself. And if you talk about the margins of the company, it's better to look at the company's performance on EBITDA per ton basis and not in percentage manner, because the percentage obviously keeps varying depending on the HRC prices. So the EBITDA per ton has been altogether in a healthy growth manner, and so we don't see any downfall which has happened except maybe the ROC, ROE.
Wonderful. That was really helpful for now. Congratulations again, and good luck. Good luck for the year ahead.
Thank you.
Thank you. The next question is from the line of CA Rajesh Mangal Agarwal from Rajesh Mangal and Company. Please go ahead.
Yeah, am I audible?
Yes, sir.
Yeah. Hello, thanks for the opportunity. I have just two questions. Why the Q2Q, quarter to quarter sales has been reduced near about 17%, from 567 crore to 466 crore? And second one is, why the promoter shareholding is reducing? I am a retail investor.
Thanks, Rajesh, for your question. So the company's goal is to supply products in the market, having a good margin as well. If you look at the numbers last quarter, we did 1 lakh tons of volume, and that quarter our VAP product share was low. Hence, the absolute EBITDA and the actual profit the company did is almost same to what we did this quarter. And so it really doesn't make a difference if it basically dies if you link that side or this side. So the focus of the company is to eventually increase its VAP share. And this will be happening in a phased manner every now and then quarter. In this quarter, we expect the volumes to be good as well, again reaching a new all-time high with an increase in VAP share as well. So that's how we aim to get the market in the future. And if you talk about the shareholding of the promoters, the promoter shareholding has gone down because we've converted some warrants, which has led to the decrease in shareholding. There has been no sell of stake from the promoter or any of the promoter entities. So the promoter are not selling at all. It is just some conversion of warrants which have been happening every now and then in the quarter, which decreases the shareholding. Now, if you talk about the situation now, we issued the promoters warrants as well in December. So post that, our shareholding is supposed to go up. So it's just a phased manner in which maybe 1 2 quarters you keep seeing the shareholding is going down because of the warrants conversion from the public category. But eventually, when the promoters will convert their warrants, the shareholding should go back to 60s level.
Okay, thanks for the answer. And the last question is, why this ROC and ROE is reducing drastically? Near about 50% has been reduced as compared to last financial year.
So as I mentioned, around 65 crores is in work in progress for the advances of machines that we given. So when these assets come and then they will start sweating, they will generate results and give numbers as well. So it's just a temporary blip that it's visible. I think by H2 itself, by end of H1 itself, we should see the ROCs and ROCs going back to 30 level.
Thank you. That's very helpful. Thank you. Thanks for the opportunity.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good morning. Just a question, on the 1 million ton expansion plan. So, are there any concrete timelines as of now? By when can we expect production to start from there?
Thanks, Pallav, for your question. So we're expecting everything to be set up or commissioned by fourth quarter, and the same numbers should be evident in the next financial year fully.
Okay. And what about the additional one? I'm talking about the additional 1 million from 1 to 2 million ton. So,
all right. For the additional 1 to 2 million, the company's plan is to set up everything by FY27, and the same production for the entire will come by FY28. So by FY27 end, or maybe before we expecting everything to be set up across the Maharashtra plant. Obviously, it's going to happen in a phased manner. So every now and then, in every quarter, you should see the numbers flowing in because of some machines coming in. But the entire scenario of the whole 2 million tons should be evident post FY27.
Sure. Okay. And also, just on the EBITDA per ton metric, compared to peers, we have significantly done better in the fourth quarter. So are there any still old galvanized contracts under Jal Jeevan Mission still in place, or now those are out of the system and this, we can probably maintain or increase the EBITDA per ton due to higher backward integration? Is that the scenario going ahead?
For the Jal Jeevan Mission, right now, since a new permit is under formulation and soon we will see it up and running, only after that, the full budget, when the full budget is declared, only after that, the allotments will happen and the new orders would come in. We only have a little bit of trickled orders from the last year, which are, say, pending to be completed. But the full flow of all these projects will come in only after the full budget is declared. So after that, we can see a good rise in orders from these entities. But due to a recent correction in prices and market being stronger, we've seen a good demand in this month, and going forward, we see that there's going to be a good flow of material with the increase in range that we are coming up with. Also, the export market is doing better as compared to last year's performance due to increase in prices worldwide. So we see that most of the legs are covered, and since we are not stuck in a supply to one organization or one sector, we have the opportunity to increase supply in others. So yes, we see a good flow of material right now.
Sure. So basically, our advantage in being present in both primary and secondary markets and backward integration is already showing up in the superior EBITDA per ton, and this should continue going ahead. So is that broadly, correct?
That's correct. It should further going down. It should further increase as well, as we mentioned, because of the acquisition of Nabha Steel, how the numbers will add up, and they will effectively not be evident in the top line, but they should be evident in the bottom line.
Sure. Yeah. Okay. Thank you for the answers.
Thank you. The next question is from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello, sir. Good morning. So just want to understand, have you implemented the DFT technology which was supposed to be commissioned in Q1 FY25?
No, the DFT technology is talking to you is right on the way right now and being imported from China. It should be reaching the plant by this quarter or maybe beginning of the next quarter and should be commissioned by end of H1.
So it's kind of delayed, if I am not wrong.
Yeah, it's been delayed by a month or two.
Okay. And what will be the capacity post this DFT technology is also commissioned? By the end of FY25, it should be 1 million, and before that, once this technology is commissioned?
So we are adding capacities in our Raipur plant as well, in our Maharashtra plant as well. So we are adding around 2 lakh tons of capacity, including DFT, in the Maharashtra plant, and similarly, we are adding capacity of 2 lakh tons in our Raipur plant as well. So altogether, we should have 1 million tons of capacity before the year ends.
Okay. Just want to understand, sir, as the guidance has been given of 30 to 35%, but if I'm not wrong, as we have done some acquisitions as well, and as this capacity numbers will be obviously live by next year. So just want to understand, is 30 to 35% achievable, or we can do more than that? Given this new acquisition is also done and EBITDA per ton, we are expecting some good uptake in this next year.
So the expansions the acquisition that we've done right now, it's a backward integration. So this won't be really evident in the top line or the volumes. the numbers that we are given of 30% growth is without accounting for all the expansion that we are doing this year itself as well. So as and when the machines come, we keep upgrading our guidance for the coming year itself. So it's a matter of time when the machines come, and we'll maybe upgrade our guidance.
Okay, got it. And this year, VAP product share was around 34.5%, right? And we are expecting 40%.
Yeah, this year our value to product share was around 35-30%. And going down the line, this year we expect to cross the 40% mark.
Okay. One last question, sir. As you know, Q4 we see some demand slowdown. How is this quarter been, like, as on date as we speak today?
So as of day today, we have been seeing very good demand from the export market as well. And we are very confident that we should achieve a new all-time high this quarter.
Got it. And export share, are we seeing this number to go still up, because we are seeing some good uptake in the export numbers overall?
Yeah, we've counted the exports and we've accounted exports for this quarter, and then given the new targets. There's a good demand in the exports, but we know that the domestic market will recover now and then, maybe by end of this quarter or beginning of second quarter. So giving an exact number on how much percentage of exports we will do this year would be hard right now, because the domestic market itself is very strong.
All right. I get back in the queue. Thank you so much.
Thank you. The next question is from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Good morning, sir, and thank you for the opportunity. Sir, I wanted to understand, how do you hedge yourself against the RM prices? Like, in the last 1 month, about HRC prices have been on an uptrend. So how do we see our margins shaping up going forward just because of the RM price hike?
So to continue our production in a full manner, we do have to keep an inventory of about 12 to 15 days, but it really depends upon how we are shaped up against the back-to-back orders. To give you a broad overview, like currently we have two kinds of products, primary and secondary. In the primary market, we are procuring materials from JSW, Tata, SAIL, wherein we do have a monthly pricing with them. We are able to procure so much material from them that we are able to sell in a month. That is fairly covered from those entities. And in the secondary market, there is a daily pricing. So whatever the increase or decrease in the market there is, it's on a daily basis, and not even say a daily basis, on a hourly basis. So there we are able to hedge our raw materials on a back-to-back basis. So these are fairly the points that let us cover our raw material hedge. When we talk about a supply to our end user, say the government organization, we supply to a government entity, there is a price variation clause. Even if I do a pricing with them in the beginning of the year, the pricing that is applicable is on the basis of the month that the material is being supplied to them. And from the dealer network, it's on a monthly price basis, on a contract-to-contract price basis. So we are fairly covered on our purchase and sales in that manner. And exports as well, we have a fixed price basis wherein we are only occupying orders which we can complete in a time frame of 30 to 45 days, which does not allow us a lot of time for say have a effect of the increase or decrease in prices. So that's fairly how we work on these matters.
Okay. So to a fair extent, you can basically pass on the price escalations or the reductions to the end customers.
Yes.
Right.
Fairly.
All right. And so reasons why your volumes fell down in Q4, like on a quarter-on-quarter basis, if you look at it that way?
So if you talk about the volumes for the fourth quarter, it's basically, as I mentioned, a dice which I can throw this side or that side. So if I'm just doing more volumes and not focusing on the main product that I want to increase my sales for in the future, which is value-added products, so then I'm actually eventually taking a hit on my margins. So, like, if you look at the whole numbers, like the numbers as a whole for quarter 4 versus quarter 3, they've just been the same in the bottom line and EBITDA, everything. And in fact, the EBITDA per ton has increased in a very good manner. So the company's goal is to not spoil the market, to have the margins increase the market share with proper distribution of these value products as well. So that's the company's approach. In this quarter itself, we have a new galvanizing tank which is being commissioned and starting up in Maharashtra and a Raipur plant. So after this commission, we'll be able to supply more black pipes and at the same time supply more galvanized pipes as well. Supplying black pipes and increasing the market share is not a problem for the company. Cutting off 200 rupees and selling black pipe is something that can be done overnight. But that's not the goal. It will eventually take a hit on the EBITDA as a whole. So hence we'll be having a approach in which every quarter we'll be increasing our VAT share as well and at the same time increasing the whole volume as well.
Okay, understood, sir. That's it from me. Thank you so much, sir.
Thank you. The next question is from the line of Virat Shah from Arihant Capital. Please go ahead.
Thank you for the opportunity, sir. I have a few questions. Firstly, regarding to the industry, if in per ton capacity, if you can tell me what is the industry capacity right now and the demand, let's say for FY24?
So it's, thanks for the question. It's very hard to give a light on what is the exact industry size, but we expect the industry would be close to 13-14 million tons. And there'll be various numerous players in that. And the projection for this year, we've already mentioned, we'll be going close to 4.5 lakh tons of volumes this year going forward, which will be further upgraded when our different capex machines as and when come in the plants.
But this 4 lakh tons is something that we are adding. Industry-wise, if you could tell me how much capacity is coming in?
It'll be hard to tell exact number, how much capacities are coming in. There are few peers who are adding capacities. So next to net that we know that around 1 million ton is something being added in our peers itself. But getting the numbers for the whole industry is something we can't really tell right now. And obviously, our goal is not just to increase the same products. Our goal is to increase our SKUs. So no matter what the industry is adding, our products are a little different from the others. We are adding more SKUs, which are replacement of wood and having ample uses and have a good demand in the export market as well. So being a star exporter, we see a good demand in the export market for our product itself as well. What we will be manufacturing in the future with the capex. So that's all it.
Right. Understood. So my next question is regarding the DFT capacity. So what is the current DFT capacity in the 6 lakh ton capacity that we have? And when we reach 1 million tons, so what that is by the end of FY25, how much of DFT will it have?
So we don't have a DFT capacity right now. And because whatever capacity that we have is up till 12 inches of pipe, it doesn't include DFT in any of our plants.
Going forward, we will, from a 1 million tons of capacity, we would be having about 2 lakh tons of capacity as DFT structures and 8 lakh tons as traditional pipe manufacturing.
Understood. So in the Raipur and Maharashtra, the two places that we are adding capacity to 2 lakhs each, so DFT will be added 1 lakh in each capacity?
By the end of this year, we are adding 1 lakh tons of capacity, DFT capacities in our Mangaon plant, and say by the early next year, we'll be adding another 1 lakh tons of DFT capacity in our Raipur plant. So that's what our plan going forward is.
Okay, understood. And there were some details that you mentioned on call. I just want to confirm this again with you because there was some disturbance on the line for me. Capex, you mentioned 150 to 200 crores. And in the volumes out of 675 crores, only 170 has been paid up yet. So the remainder will be done by September.
No, so basically out of 675, the last date is supposed to be, I think the money that we received was around in February. So the date for us to make the last payment is 1.5 years post February. So that's effectively August for next financial year. But promoters are not sticking to that. In fact, promoters will be putting in money every now and then after maybe after H1 as well, and similarly after H2 as well. Basically, whenever the company requires money, we have the flexibility of putting the money that way. The remaining, the 2nd September, the date which I mentioned to you, was for the warrant certificate previously in the public category. It's the last date for those people. And the money of amounting to plus 170 crores is expected to come before that.
Understood. And EBITDA per ton, sir, you mentioned that we are expecting to reach 5,000 rupees per ton this year from 4,450 that we did in FY24?
Yes. So basically, tracking the EBITDA per ton every quarter is something that we can guarantee about, but obviously it should be an upscale manner. The company's number as a whole for the full financial year or maybe for the half yearly is something what one should compare with, because that's how the growth is visible. Like if you look at the company's numbers this year as well for the full financial year, the company has done growth. Obviously, comparing quarter on quarter would be hard. So like last year as well, when we had extremely high EBITDA per ton, we mentioned it's a one-off case scenario. If you go back in the Concall as well, we mentioned that there was a humongous inventory gain that happened because of the merger that took place because of our Raipur entity, because it was back integrated over there. So all things added up to increase the EBITDA per ton. But they were not sustainable without adding VAP products, which we have done now. So eventually we will reach a number greater than that as well. But this will eventually happen in an organic manner by increasing our VAP products.
Understood. And did you mention, sir, that the 30-35% growth that we are expecting, that is without the expansion? Is that the right thing that you said?
So right now, if I'm talking about, it is with expansion, obviously, because our DFT will come in as well this quarter and our additional machineries at our Raipur and our Maharashtra plants will come in this quarter itself as well. So it does include expansion part as well. It's just that few products like galvanized pipes, we've already installed tanks for that in our plants, which will increase the VAP shares simultaneously.
Okay, and there's one final question. I'll just get back and with you after this. We have almost 130 plus acres of land bank. So after 1 million tons, we are aiming to reach till 2 million tons of capacity. After reaching 1 million tons, sir, out of this 130 acres, how much will be required to add another 1 million tons?
So right now, if you talk about the area, so out of the whole 130 acres scenario, around 9,500 acres is what we have in our Maharashtra plant itself. In our Maharashtra plant, around 7-8 acres is covered right now. Going down the line to increase the capacity to 1 million tons, maybe another 10 acres will be covered at max. So post that, when I'm expanding to 2 million tons from 1 million tons, there will be anyway a lot of land bank still left. I won't be covering more than 40-50 acres going down the line again as well. So the land bank would be still left over there for further future expansions.
And then just put it this another way. So out of 130 acres, we'll be using up roughly 40 to 50 acres. And we still have 80 to 90 acres left even after reaching 2 million tons.
We'll be obviously developing the area and making some parts of it for storing some particular sizes of pipes as well. So giving exact number, how much area would be ample that time going down the line, it's hard to say right now.
Okay, understood. All the best for the future. I'll just get back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Sanjeev Damani from SKD Consulting. Please go ahead.
Namaskar, sir. Am I audible?
Yes, sir.
So now my first question is regarding direct forming technology, which is used on the page number 3 of your media submission, where capacities are also mentioned. So I heard, a lot of disturbances were there in this conference, but I heard that right now we do not have any DFT capacity. We are going to put them up. So can you elaborate what is direct forming technology, and can you also tell me that whether it will start from iron ore to finished formed products, or how it will work? Please, sir.
Yeah. Hi, Damani. The direct forming technology is the traditional way of making a square and rectangular structure from ERW pipes is forming a round tube first and then converting into a square or rectangular structure, which does not allow us to make heavier grade or higher grade steel structures from the traditional machines that we do, and is also a very tedious thing to do to make any non-standardized, standardized or special products that are required by the engineering industry. So the DFT technology allows us to have the square and rectangular sections produced directly without converting into a round structure first. And to answer your question about what raw material we'll be using HR coils only for the production of DFT. It is not from the source of ore. We will be using the same raw material of HR coils, but a higher grade and a higher thickness will be allowed in the production of the DFT structures.
Okay. My second question is whether we manufacture seamless tubes or not.
We do not manufacture seamless tubes.
Okay. So all our products are welded only, right, sir?
Yes.
And the backward integration you talked about is 2 lakh metric ton because of the acquisition of Nabha Steel. So what exactly that Nabha Steel has facilities to manufacture? Can I know, sir?
So Nabha Steel is backward integrated. How is that we use narrow width coils for manufacturing of ERW pipes and tubes. Nabha Steel has a melting shop wherein we can melt scrap to form billets. The billets are then re-rolled to narrow width HR coils, which will be used for captive consumption.
Okay. Sir, so are we running at full capacity of 2 lakh tons in Nabha now, or we are yet to build?
So we have just took over Nabha Steel. We are still in the process of upgrading and getting it under our nose for its full capacity utilization. After say a quarter's time, we would be having the full capacity of Nabha Steel running under our supervision.
So how much is the capex here, sir, in upgrading and refitting this unit?
So it's just, it was a running plant, but it is just certain minor upgradations and process flows and debottlenecking that we are doing. So there is no major changes that we are doing, and it is a new plant itself. So we are just reorienting it as per our needs. So that is what we are doing right now.
So to reconfirm, our capacity utilization will be 100% from next quarter from this plant.
No, we will not be having 100% utilization. The average utilization will be somewhere around 65 to 70% in this plant as well.
Okay. And in Raipur also 150,000 metric ton, we are putting up this kind of facility only, that is using scrap to make basic steel and then process it.
No, we are not doing that way. We buy billets from the market and then we re-roll them into.
Okay. So in Raipur, you are going to have a rolling plant.
We already have a rolling plant.
Okay. Thank you, sir. I am satisfied, and all the best to you, sir. Please, I pray that our company progresses well. Thank you.
Thank you, sir. Thank you.
Thank you. Due to time constraint, that will be the last question. I will now like to hand the conference over to the management for closing comments. Over to you, sir.
Thanks to Mama for hosting the call, and thanks everybody for taking our time to attend the call as well and asking us all the questions possible. We like to give the guidance which is around 30% growth over this year for the next year, and at the same time working better with the margins as well because of the whole acquisitions that the company has planned out in such a way of backward integration and forward integration. Things should add up in a very good manner, and then after H1 itself, the numbers should be visible as well. Thank you everybody for joining. Thanks.
On behalf of Nuvama Wealth Management, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.